Wednesday, April 9th, market analysis, Stan Ehrlich. Good morning, 9:51 California time. And we start with stock market indexes and go to futures. And I got a couple stocks I'm monitoring. Apple is one of them. So let's review here a little bit. Late last year, the market started to reach a plateau. In the case of the E-mini, you can call it a triple top or a double top, and basically started early December. About mid-February, we had the last high of significance for the indexes in general. And I started talking about a possible double or triple top formation. And now let's go back to a little bit more zoomed in current. The market started to slip, got a little oversold, and it got to the breakout point. And on March 4th, a month ago, we did make a new low below the lowest low between the two highs for a double top or triple top, between the lowest low right here. So that immediately kicked in a downside objective of around 5,500, which I've talked about for weeks. And the market started to come down, and it got more and more oversold. And finally, after almost reaching my objective on March 13th, and then a bounce to resistance, the market did come down to my minimum 5,500 objective on April 3rd. Now, April. That really was the beginning, or the day after the beginning, of the little crash we had here. And that, of course, was Thursday and Friday of last week, and Monday, and basically Monday of this week. 3 huge down days. We all know why. I'm not including the fundamentals behind the reasons. I'm just stating facts here. So it obviously fulfilled my expectations about the objective and pretty much doubled it in an incredible 2 or 3 days. But where are we now? We came down on Monday into a historical support area. Now I'm going to show you a longer-term chart, much longer-term chart. This goes back all the way a little bit before the COVID crash, and here's the COVID crash, February 20 to about March 20, almost exactly 1 month of 2020. So we'll look at the size of the crash we've just had from the high in mid-February to the low Monday. The amount of crash was actually a little bit larger than the whole month decline. Middle of February to middle of March in 2020, the COVID crash was actually smaller in terms of number of points, maybe bigger from a percentage point of view. Yeah, I'm sure that's true. But number of points, we just broke, and a point equals $1, so it's the amount of money is bigger. Well, a larger amount than the COVID crash. Wow. So we banged into support on the way down on Monday. A historical support level that has some significant credence to it. It's not one of the best ones, but it so far, and it's only been 2.5 days, has stopped the break. And this statement basically goes for the other indexes as well. There's a little idiosyncrasies, as to which ones stopped where and for what reasons, but Monday's oversold, and one commonality was an extremely low RSI, 11, 12, in that ballpark, slightly above 10. And you know that I keep talking about above 90 or below 10 is almost a blind, and I hate to say that, and you shouldn't do anything blind, reason to start to buy. Whenever you see daily RSI, no other time frame, daily RSI heading down to around 10 or lower, I just have to look for buy signals and warn people that it's about to turn back up again almost immediately. And I'm meaning minutes, hours, or maybe a day or two. So here we are, Wednesday, and let's look at the details. We had an inside, well, almost, trading range day yesterday. There was no low lower than Monday's low for the E-mini. And the high was just a little bit above Monday's high, barely. Now, the closing price was lower on the day by a chunk, not particularly small by any means, but considering the increased volatility skyrocketing in the last full month, let alone the last week, the down 10 points was all of a sudden kind of normal. Remember, we've seen a range of 20 lower to 20 higher approximately just in the last couple of days. And don't let yourself think that won't happen again today. We already were a lot lower, testing that same support area from Monday and got below yesterday's lows and managed to hold overnight and come back to what is now actually a reasonable, under normal circumstances, 5 or 6 points higher on the day. Now, that would normally be a pretty good up day, not super great, but certainly not bad. Under the current conditions, it's small. It's just not, real big, given the volatility. So I would like to see, because I do believe the markets are bottoming out. I do believe that we've hit support, oversold conditions. We don't have any buy signals, except for one of them we do, and we'll see that in a minute. We might get buy signals in the next few days that we don't see yet. That would be nice. And then a rally. I don't think the rally is going to go very far. I don't have hope for this being a major long-term bottom for months and months and months to come. I'm expecting a rally back up to resistance, a percent retracement, maybe a Fibonacci retracement number of some sort, and then a test of the lows, if not making new lows again. And I think still this month, all of that rally up, stop, coming down, new lows in April. That's my best short-term forecast at the moment. So how far up? Well, at the most, 55, 50-ish. And I don't even trust that much. Next. This is the 5-minute chart. 1-minute chart on the E-mini. As you can see, we're getting very close to making a new high for the session. Not quite yet, but coming up pretty good. Close to the high we made just a few hours ago. Yeah, a couple hours ago, 3. I think it's going to make minor new highs. Let's look at the SPY. It's going to be about the same. But we do have these gaps to close on the spider. So here's 55 or 555 on the SPY to close the highest gap recently. Now another gap is closed as smack at resistance at 536, so that could stop the rally. We've already seen about the same high price on Monday, on Tuesday, on Friday, on Monday, and on Tuesday. It stopped approximately at 525, 3 days in a row, and there's a big gap above that. My best guess, 537 is going to be the high of the rally on the SPY, and then down in the next several days, maybe a week or two. I don't want to see lower lows below 481 on the SPY or any of these indexes. That could start another big wave down. We're currently slightly higher on the day, up about 4.5 points. Nothing special. Next chart is the spider 1 minute. That's a little delayed. Sideways action, nothing happening. We did get a buy signal in the QQQ on Friday. Monday, this Monday. We had an outside trading range day with a slightly, barely higher close, but it qualifies. Not only that, we were in a support area for the Monday low, for the Tuesday low, and today the low is even a little bit higher. But this is a doji, so we're the rally so far today hasn't even been up in the middle of the range of yesterday. And not, it's the lowest high price for the session so far for the move down. All the other highs last week and Friday, Monday, Tuesday, and so far today, they're all lower than each other except for one. So there's not a lot of strength coming in either. But we'll see what happens. I'm still looking for a short-term rally. Next, 1 minute chart on the QQQs. Now, the NASDAQ futures NQ came down to support historically, held. The lows are in a reasonably, considering the volatility, same price range for Monday, Tuesday, and today so far. And we are high and last right now, making minor new highs for the day. Good. But it's way far away from yesterday's high, which is almost identical to Monday's high. So if we get above yesterday's high, we'll have a new high for the week. And that should cause more upside momentum and a further rally. Where I'm looking at 19,080 and maybe up to about 19,700. I know these are not small ranges, but because of the volatility increasing extremely dramatically, you have to widen your flexibilities, ranges. So, bounce time again. RSI got down as low as 12 and a half or so, 11 something on Monday's low. Next, 1 minute chart NASDAQ. Next, and that's a new high for the day, for the session so far right now. Okay. YM Dow Jones, same thing. Historical support to some degree. Lows at similar price ranges. RSI super low, got below 10, slightly. I don't know, did that actually get below 10? That got down to 10.13, not quite below 10, almost. Starting to work up higher on the day, 441, 438-ish. Got a long ways to go to get above yesterday's high, which would create a bullish engulfing buy signal. And I'm not saying it can't do it. With this kind of volatility, all of a sudden, all you have to do is have some kind of political commentary or you know what, and bingo, you are running up an incredible amount at incredible speeds. Don't turn your back on these markets without some kind of protective orders if you are in a trade. 1 minute chart on the YM, new highs for the session so far. Got to get way up here, up to about 4,000. Well, not quite. I'll give it a more accurate 39,647 in order to have a bullish engulfing buy signal. Next, we have a little tiny double bottom from Friday, and today's low is actually a little bit lower than Monday's low, but so close, but lower on the Russell at a major historical support area in very, very deep oversold conditions. RSI got down to about 10 or 11, just like the other ones. And this is very rare. You don't see a level of around 10, 12, 8 on daily data RSI charts, the way I calculate it on my custom RSI, but approximately once a year, maybe twice, maybe not in a whole year. Same thing for 90, by the way, on the way up. If you reach 90, watch out. You're at a top. Almost a guarantee. You never want to use that word in this industry, a guarantee, unless you're earning 1% per year on a savings account. All right. Trying to bottom out, up on the day a little bit. We'll see what we get. Minor new high for the day happening right this instant. Within the last 60 seconds, sorry. Next chart. Interest rate futures bonds have totally wiped out my head and shoulder bottom formation that I was tracking until finally Monday, big bearish engulfing, huge drop below, stayed below, closed below the neckline. I canceled on Tuesday the markings for the shoulders and neckline. And now what we've got is a long-term bull trend line off of the buy signal lows October 20th of 2023 and the buy signal lows exactly to the day. Huge turning points in both cases on January 14th, 25. Those of you that don't watch my YouTubes very often, these are not after the fact. These green bars happen to tick real time that the signal happens. I don't wait until later to calculate them. That's real time stuff. So if you draw a trend line off of those important profound lows, we smack right into that trend line today. And for the first time, we got just a little bit oversold today for the first time. And look at the bounce back so far. Pretty darn reasonable, but it's still down almost a point. So, it's not coming back that well, but you got to give it some credit. It's back more than halfway up for the range of a very, very big down day after getting oversold and bumping against a trend line. So that would have been a great place for a really gutsy trader for chart pattern purposes to consider being a buyer. You would have gotten pretty much the low of the break and already real happy with the trade so far. Now, I think it's going to start rallying a little bit, but this throws everything up in the air other than the broad double bottom or trend line or oversold conditions causing me to believe it's going to rally. I don't have too much else to go on, so I'm going to just leave it at that for the moment. 10-year notes are not quite the same, but very similar. Bearish engulfing on Monday kills the head and shoulder bottom formation. I've eliminated my shoulder markings, the head of the formation markings, and the last shoulder low markings because this is closed on Monday and yesterday more and even a lot more today below the old neckline. So that's gone. And I'm back to a trading range, not oversold, came down to some support, bounced off it mildly so far. I think it's going to bounce a little bit more, but not much. Not for very long. Okay, crude oil. We got a sell signal yesterday. A very, very unusual place to get a sell signal. We were, in fact, overbought within the allotted number of past days. But 99% of the time, I don't see the market coming down that much within the allotted number of days and then having another sell signal when we are so close to being oversold or oversold flat out. So I'm not trusting this sell signal very much, although today it is working. And you woulda, coulda, shoulda had a day trade profit on the new scalp short, and the overnight short is working. But I would be tightening my stops super fast in this very unusual circumstance, or maybe I would have gotten bumped out already. But I would not let a profitable position go to a loss because this is an indication the oversold condition got down to 12. Again, watch out. This is trying to turn up. Probably to at least 63.5, and 65.15 looks awful good also. Call it 65. Heating oil, same story. The low today is almost the same, just barely above the low on September 11th. I just had 9/11. So oversold for a couple of days, in the process of bouncing, support levels. I think it's going to run back up to probably 2.1 and maybe even a little bit higher. Next, we've got natural gas, the head and shoulder top that I've been talking about for now at least, 2 or 3 weeks, is doing great. But it's oversold also. It does deserve a little bit of a bounce, and it is obviously not being affected as badly as crude and heat. So natural gas is drifting off in a normal fashion, in a normal head and shoulder top, and I'm already today about 3/4, 2/3 to 3/4 of the way down to my minimum downside objective of about 3.0 that I've been talking about for weeks now. I don't see the other market volatilities affecting, at the moment, natural gas any unusual way at all. If you just looked at natural gas, you would never guess that everything else is going crazy. So, normal, looking for my objective to get fulfilled, but a bounce first because it's oversold. And probably back up to about 3.824, I'll say. Next, gold, silver, platinum, copper. Also some very crazy stuff going on here. Gold is rallying a huge chunk, did not quite get oversold, too bad. It did come down to my first support level, which is because of these highs in here and a little bit right there. That was the more accurate one, 2967-ish. And we're getting a bounce. Now, there's no trend change here. There's just a 3-day sharp correction after a new historical highs, getting up to a minimum upside objective because of an old pennant formation and getting into overbought conditions. So a correction. I didn't expect it to be that fast, but I did expect it to be that much. So it just happened quicker. This is an outside up day, bullish engulfing, but we're not oversold, so I'm not getting a green buy signal. We just have a bullish engulfing. I think it's about to make a new high for the whole damn trend on gold. And that would be above 32,000, 3,200, I should say. Silver, today, now, a brand new, as we speak, bullish engulfing ER buy signal. We were oversold last 3 days, including today, the 4th, at the lows, maybe even the closes. And maybe even looks like one of the highs was in oversold territory. But I measure how oversold or overbought we are at 3 points, at the high of the bar, at the low of the bar, and the close of the bar. Wells Wilder, who I learned RSI from personally, only measured on the closes. We didn't have tick-to-tick data in the late 60s and 1970s, and even throughout the early 80s. No such thing. Only daily data and daily data information. Open, high, low, close, and the rest of it. No hourly, no 1 minute, no tick to tick, no nothing like that. The internet wasn't there. So, daily bullish engulfing, if it stays higher than yesterday's close, which looks highly likely, we should have a rally. Now, here's the problem. So far, this head and shoulder top, which is massive, 1 year in size, first shoulder high, May of 24, the head, October 24, and the last shoulder high a couple of weeks ago, March 28th of 25, a couple of weeks ago. Crashed to the neckline in 2 days. It went from almost the high of the shoulder all the way down and below the neckline that fast. Classic downside breakout, high speed, high volume. The next day, it was right up against, coming up against the neckline, stopped cold turkey right at the neckline, textbook price to go short at right there. It closed a little stronger, went down a little bit yesterday with a doji, and today, a bullish engulfing. It says this head and shoulders is not going to work. The bullish engulfing today says we're about to start going, and maybe yet today, above the neckline, canceling out the pattern, and in which case I will erase the shoulder and head markings and the neckline and go back to looking at other features. But it hasn't happened yet. There's a chance the signal could be a bad one. There's a chance the head and shoulder could still be good. So I'm not getting bullish yet. I'm only telling you that this buy signal says I should be. Probably should be. But I can't ignore the pattern. So I'm kind of caught between a rock and a hard spot. Next, platinum. On Monday, platinum got down to a new low price since May 5th of 2020. 5 years. That's a new low for extreme long period of time. Now, just a couple of days earlier, we made new lows below a variety of support levels since July of 22, 2.5 years. So this new low on recently, a couple of days ago, Monday, was a very profound breakout, but we didn't stay below all those lows. We came back and closed reasonably firm compared to the low of the day on Monday. We held our ground basically yesterday. This is kind of like the way the stock closes are, not going up or down net a lot, but the highs and lows are big swings. So I think it's bottoming out, and it doesn't have much higher to go to get above yesterday's high. We've already been below yesterday's low, and we've been oversold for 4 days, today being the 4th. So we could have a bullish green if it'll get above yesterday's high by the time it closes today, which hasn't happened yet. But oversold conditions at historical support, I think we're going to bounce back up to at least, and pretty much it's already done it, but I got to say 929. So that's nothing. Probably 950. Then we'll see. I'm not claiming this is any kind of a long-term bottom yet. I don't think so. I think the rally is going to stop, and we're going to challenge these lows to make new lows. Pardon my cough. Within the next few weeks. Copper, minor double bottom Monday and today, around a tiny bit below a support level. But these are new lows twice now since a year ago. So it's kind of holding, did a little damage, but we now have a nice rally. I think it's bottoming out. I'm thinking we're going to come up to 4.4, and a much more likely resistance level of profoundness is 4.5, 4.514, if I try to be too exact. Next, grain markets. It's kind of a mixed bag at the moment. I'm trying to justify long-term bullish, and a couple of these are doing very poorly. Only one or two are doing better and not good enough, but getting closer. Double or triple bottom, I was looking at something different, but we broke down and damn near made a whole new low for the whole trend just on Friday and Monday of last week and Monday of this week. But we're bouncing slightly. I need to close above 1035 in order to get more enthusiastic about a bottom. I don't want any closes or getting anywhere below 965, or it could just fall apart. I do want to note that the rate of descent on a long-term basis is slowing down. So even though we're making new lows and the bear market persists, the rate of the bear market is much slower than before. What happened here? We just had a sharp rally in the last minute or two in the stock market indexes. E-mini. Look at this. Somebody said something somewhere. You know who? We're now up 15 points, or 140, 150 on the E-mini. I told you this volatility is strange. Look at this thing scramble. It is skyrocketing. We're up 20. You only have to get above this price level here, 53.04, and now we're up 25. We're about to have a bullish engulfing if we get above. I got to go back, ladies and gentlemen. Look at this. Almost a bullish engulfing. It could be turning green any moment. Spider is lagging behind because of my delayed data. Q is the same thing, but it's right up there. NASDAQ is right up there, high and last. And we're getting some signals in other places, I'm sure. The YM is right up there also on the daily data charts. All we have to do is get above yesterday's highs, and we're coming up so fast. And the Russell is lagging behind. Well, it's not lagging behind. It's right up there near yesterday's highs also. It could be a matter of moments, literally. We're coming closer again, where we could turn green in front of your eyes here. This would be a real-time bullish engulfing ER buy signals. If I can only get it above, come on, the high of yesterday. I'll put a horizontal line at yesterday's high right there. And now we're losing strength. We reached the resistance level and we're pulling back some. Phew, that was interesting. I don't get a chance to do that for you guys real time very often, do I? Nope. Wow. No higher high. No higher high. And the Russell also no higher high than yesterday's super close and now pulling back sharply down to here, dropping off like quick. Well, this is exactly what rumors, I hate to say that, tend to do to markets that are already on edge to a nth degree on edge. All right, let me go back. What was I looking at? Beans. Oil's doing good. The pattern's okay. It's just a little bit more of a retracement than I expect in support, not oversold. I don't have anything particularly terrible to say about oil, soybean oil, except that the last time it got up to the resistance level, it stopped. So we got to start closing above 48.50 in order to get this bullish ball rolling again. Right now, it's a little bit in question, but it hasn't ruined the pattern. We don't have any failures of any major amount, just a little bit of a significant sized dip. Next, we're looking at, okay, just a second. I want to see something else on another screen. I got three big monitors here, so I can see what's happening on other charts while I'm showing you my YouTube charts. Okay, soybean meal coming up after new lows and oversold. So there's no bullish pattern here, only an oversold. This is new lows for a very large number of months and years on soybean meal. So I haven't got anything. I'm getting signals coming up on a variety of places. Okay, I'm going back to the stock indexes. I'm sorry. We're right back up to the highs almost. I've got a line right there I just drew for you on the E-mini. When that is broken, this daily data chart will turn green. And we're almost right back up there. Spider, same thing, but delayed. So I'm going to go to the NASDAQ. We've got green. The NASDAQ hit new highs above Monday's high and yesterday's high after being below yesterday's low. Wow, what volatility. I can't believe this. Well, I can. I lived through the Russian grain deal, 1987 crash, 9/11, everything for 53 years. I have not seen this kind of movements fast, large, in several years. Well, since COVID. But that was, medical thing. The rest of them were either financial, rumors, assassinations, 9/11 stuff, but not medical. So you never know. You never know what's going to cause these things. I'm getting alarms going off all over here. Let's see about the other one. We got a green bullish on the YM. Look at this. We're going crazy here. That's it, across the board. I've got a bullish engulfing on the E-mini if we stay above yesterday's close, and we are up 31.2 points. Green, not yet, but this will turn green in about 10 minutes, and I've got 15-minute delay. Qs will do the same thing exactly. Every single index has just turned green in front of your face. NASDAQ. Wow. The YM, the Russell, We left no survivors. Every one of them turned around big time. Now, this adds more bullishness to my commentary in general that I went through for all of these things. I'm going to end up coming back to this real quick, but I have to finish up super fast here. Corn, new highs recently, almost a minor upside breakout, almost overcoming some resistance. The pattern's good for a major bottom in corn, and it's acting the best of everything. Wheat trying to turn around, kind of like soybean meal. We'll see what happens, but I'm losing some bullishness in some cases. Cattle, oversold, starting to rally, could have a bullish engulfing, kind of like the indexes just did a matter of minutes ago, if it can get above yesterday's high. Hogs don't know what to do at all. They're just going sideways and are just oblivious of what, hogs are languishing around in the pig pen, not doing nothing. Shell, wouldn't be surprised if this also had a huge reversal. And what about Apple? Here we go. Apple could have a bullish engulfing like the other indexes. Oh, it can't. It didn't get below yesterday's low. So I'm not going to have an outside trading range bullish engulfing, but it could be bottoming out. We've got gaps to close at higher levels. I'm going to go back to the E-mini real quick, and then we're over for the day. Wow, what a day. High and last, we're up 36 big points. Has the spider done it yet? Nope. It's going to be very fast in about a few minutes. NASDAQ, currently up 1,500. And we are now above the high of Monday. This is a new high for the whole week. E-mini, almost, not quite yet, above the high of Monday. NASDAQ, above the high of Monday. Dow Jones, not quite yet, way above Tuesday and Monday. Oh, yeah, we're above. I was thinking Friday of last week. Sorry. We've got a new high for the week, definitely. Also in the YM. Russell, not a new high for the week, but a bullish engulfing, and not too far to go to get there. And bonds are up to almost unchanged. Oh my God. Well, I'm going to leave you with this. Profitable trading to you. Have a great day.